Hi guys, just a couple of things about these mortgage deferrals. Two things actually, mortgage deferrals, and the other thing is about pretty much buying. When you go into a mortgage broker or a lender or a bank and you're getting your loan and you're buying into a deal during this crisis. A couple of things that I've heard and I've seen happening. First of all, mortgage deferrals, they're not fully deferred. It's not a forgiveness. And you're gonna be charged the interest if you do get qualified for the deferral. It's the interest of those, let's say 2, 3, 4, 6 months, whatever it is that you're getting. That's gonna be added. The interest is gonna be added to your mortgage as a principal. So you're going to be paying interest, whatever it is, on that interest. So that interest not going away. They're working on it. The different groups have got together and they're complaining. They're trying to get more near the finance minister to do something about this. But we live in a capitalist and sort of democracy. This is not a socialist country. I doubt the banks will do anything about this. The banks are more scared than anybody else. The shareholders of the banks are more scared than anybody else. They don't want to lose money. They've got so tight. I really highly doubt they would do anything about this. So if you really need to have this deferred, do it. But if you're doing it just you think, hey, let me save some money, let me do everything else like everybody else is doing, don't apply for it. Pay it because you need to pay it anyways. If you think you're a smart guy and a girl, you're gonna get this thing deferred, and at the same time you're gonna have the tenant pay you the rent, and you think you're gonna be ahead. It's not always like that necessarily. First of all, if the government or anyone ever finds out that you did this, you got your mortgage deferred, one of the reasons is if it's an investment property is that your tenant is not paying rent. If they find out that happened, God help you. And number two is that if it's your own property and you really want to get it deferred, make sure you've applied for everything else, such as the EI or the CRB, whatever the support for the self-employed is. Make sure you apply for every other thing that's out there first before you apply for all your deferrals, your credit cards and all that. Otherwise it won't make sense, and you get caught, you get penalized, and the outcome won't be nice. So make sure you apply for that deferral. At the very least, I should say, let's say really helps you, and do it only for the amount of time that you really need to. So at this point, that's going to be added to your principal, and you will pay interest on top of that interest. Number two, very important other thing, if you're buying this market and because you've been looking from before, and if you think that you've got a great deal and you're buying great, it is times that you can buy now. But there's a couple of side things to this. If you're buying with less than 20% down, you're at a disadvantage here, because CMHC and all that, the banks are worried about you losing your job, whether today or a month from now or a day before the closing. They used to do a lot of this on down times and even this past few years, but it wasn't done as often, what I'm going to tell you right now. But what the lenders are doing now, almost on every other deal or every deal, sure, you're calling them, you're getting pre-approved, and then you're calling me, Rob the agent, go find me a house, I'm pre-approved, or even I got you pre-approved from whatever bank or lender, or whatever mortgage agent or broker got you pre-approved, so you think you're all good. If you've had your documents fixed up, if you are not qualified as you should be, even if you have any doubts that your job, you could be laid off or your hours could be short, this is what the banks and lenders are doing. They're approving you, they're pre-approving you, and what they're doing is the day before the closing. In the States, they're calling that escrow. They're doing that in the States a lot as well, but they're doing lots of that here in Canada as well. The day before the closing, they are calling your job. So if they didn't contact the employer, if there was no verification, and whoever did this for you, including myself, which I do that, and I can get it done greatly without any verification, having things done right, applying at the right time and all that, you better know that you're dealing with the best person that knows this business out there, okay? contact me and I will explain this in detail to you. Or you can email me. Or you can go on Facebook and we can get in touch there. What's happening is that the day before, on most of these cases, especially if you don't know the underwriter, especially if that lender is not 100% contact of yours or the mortgage agent, they are contacting them. They want to get a verification. They want to be sure that they got the pay stub and all that, that whatever you provided for them, re-qualified again. They might ask you for a brand new stub on that day, the day before you're closing, and guarantee that they will call and get verification from whatever phone number you've given. So watch out there. Half of the deals are falling through, and the agents don't push the deal. If you don't know who's getting the mortgage, make sure it's 100% good of a deal. Make sure you know who you're dealing with, because if the deal falls through, your client gets hurt, you get hurt, you're not gonna get your commission, and that, Mr. Mortgage Agent, you're not gonna get your commission either. So you better follow this through right to the end. Okay, lawyers are seeing this every day, and guess what? The poor lawyer is gonna have issue as well. They might not get paid in full as well. So this won't be good for anyone, and they're going to be doing this for a while because they think there's a chance you could lose your job from today until that closing time. And I don't blame the banks. The investors are on top of them. The insurance companies are on top of them. Especially for CMHC deals that are less than 20%. The banks love it that it's insured if the price is low, less than $1 million, of course. So 20% conventional, they're not insured, but they are really worried about the job. They want to make sure your job is steady and that income steady. So these days, even if you're making $130,000 and you really are making $130,000, they're qualifying you based on 110 or 100,000. They go conservative. The stress test and the interest rate is there, but on top of that, they're reducing the income and going safe, taking a chance that you might get reduction of hours, or you might even lose your job. So make sure there's 2 of you or 3 of you that go on the mortgage, and what that's gonna do. This is gonna cause sellers out there that want to sell, but less buyers. Other than all the investors, the Chinese and all the other investors from foreign countries are having problems with their own, they're pulling out, so they be wanting to sell and they're not going to be buying that much. But us Canadians here who want to buy or buy a second property to reinvest, refinance our original home, to use that for an investment because it's a good time to go and find deals. Yes, it better be a heck of a deal. Find a property, not a condo. Find a house that's ripped apart. You don't want to buy things that's ready to move in these days. Okay, you don't want to buy a brand new condo that's out there. You'll be overpaying for it, and the chances are you'll be having problems when you're getting the mortgage because the appraisals won't come through. What this is gonna do, it's gonna take a few weeks for this to happen, is that it's gonna be less and less buyers out there that will get qualified, that can get closing. They cannot close the deal. Agents are going to notice that, and they're gonna let their their sellers, their clients know what's going on, and eventually either they're gonna pull out of the market, or the ones that really need to sell for whatever reason, they have to reduce the prices. And prices will go down, just like in the States it has gone down. We were thinking that Canada will be different. It is maybe different a little bit than the States, but this effect is gonna happen in here and every other country that's having these kind of problems. If the buyers cannot get qualified, even if they were pre-approved, they're getting called 2, 3, 4 weeks after, even though their pre-approval was for 3 months, they're getting a call within half the time and saying, sir, we can't approve you for $500,000 that it was originally pre-approved. Now you're only approved for $400,000 because we're gonna change your income to be on a safe side from $130,000 that you told us, and we believe you. We're gonna change that, and we're gonna base it on $100,000. So now if you go and do a multiple offer and put an overpriced amount, or not put a financing condition on a deal because you think it's a great deal, just like it was 2 months ago, people were doing that. Now you're gonna have a problem because you just bought a property that gets appraised at only $700,000. You paid $1 million. You agreed to pay the $1 million. It's only getting appraised $700,000, and you were putting 20% or whatever down. Now you got to put another 20% out of your pocket, or you're gonna get sued. Now you want to pull out of the deal. Make sure you take that goddamn MLS sheet and you take that to the bank with all the documents that they require, whoever the lender or your mortgage agent is, and you say, approve me on this. Don't rush into multiple offers. Agents, do not push your clients into this. You're going to create a lot of problems. You're going to create a lot of hectic. You're going to create a lot of bad deals out there, and you're not going to get paid. You know, the money's going to be in the trust account God knows how long, and the chances are you might not even see it. Do not push this on people. Okay, think long term. Don't just think today. Don't think the money today. Okay, things are gonna change. We need to allow that change to happen through, and we can't force people. You cannot push people to do multiple offers, put a higher bid, or they're gonna lose the deal. Don't do that, because this is what's gonna happen. They won't be able to close on the last deal. Make sure your client has ton of money, ton of cash. Let them know this could happen, and if it does happen, they're not going to get approved that certain amount. They're going to get less amount. If they've lost their job, they're not going to get nothing, and they're going to lose the deposit. Or if they lost their job or reduced hours, they're going to have to bring other people into the deal. You know, ton of work, okay? And most importantly, they're going to have to put a lot more money out of their pocket into the deal to close that deal, just to close what they promised that they were going to close. And chances are they won't be able to resell. If it was a flip deal, it's not going to be any kind of a flip, and they're going to be stuck with it for a while before you can resell it, and there you go, a bad name for you. So this is happening in the States a lot. I'm getting that from colleagues, friends, you know, watching the news. You can just go and Google this kind of thing out there. Deals that are falling out of escrow, you know, the day before closing, verification of banks and lenders, you know, government and insurance companies such as CMHC, the insurance company, this, you know, the mortgage housing corporation. They might even put this as a condition on the bank, that they get verification redone day before. That they're going to recheck your credit, recheck your job. They're going to ask for all the documents one more time on the last day. You better have a good agent, a mortgage agent, or you better be good with that bank. You better have the right documents. You better have a lot of cash if you're doing this. What does that mean? Yes, people with ton of money, they're going to have the upper hand here. Okay, they will during this crisis. But the people that are just, you know, trying to get a property and out there to get a good deal, be very careful. Be very careful. You're not going to lose the only money you have. Go for a deal on a property that you can close. Get a mortgage that you know if things go bad, you can close. And or make sure you have backup contingency plans. Make sure you have another family member with some salary and a decent credit that you can add on if it needed to be added on. You could bring their income in so you could still get the same amount. There are many ways. Man, this requires a great realtor and a great mortgage agent to put this deal together for you. Other than that, yes, there are deals out there, not necessarily just in Toronto and not necessarily just in condo and pre-construction. No, you need to be looking deep, and they're elsewhere. And it is time right now to make money from these situations. And there's people that want to sell regardless. They need to sell. They want to move their money into the stock market. There is ton of opportunities in the stock market. If you know what you're doing, if you have the time to put into it, and you have some money, or you're going to sell your house or refinance or have some money to play with, ton of opportunities there as well. But if you want to get into real estate, there are a lot of opportunities in real estate as well. I can tell you, I can help you. They're all around Ontario and in Canada and in US. You know, you just need to have a right agent. You need to have a right mortgage agent to do this for you, and search around and be patient. Do not go crazy. Do not put multiple offers in. Back out of those deals. That's my suggestion to you.